We will discuss those reasons of the difference one by one. Okay, the first reason is uncredited checks. Uncredited checks, or we can also call it as an uncleared check, or we can say the amount which you have received from the customer in the form of the checks, and you have deposited that check into the bank account. So what you have done, immediately you have recorded that into the bank account. So but there is a possibility that if you are receiving a check of customer, okay, deposited in bank, means your customer has given you the money and then you have simply that check deposited into the bank. So what you have done, you have simply debited the bank account, will be that. Now you have deposited that check into the bank account. So the bank is crediting, or the bank is depositing that money into your account, but this money bank has to receive from the customer. So there may be a possibility that there is some difference of the time. It is taking some time. Why it is taking some time? Because let's say your bank is bank A. Let's say you are working with the bank A, but your customer has a balance in the bank B or bank C. Okay, like you have in the American bank, and the customer has in the bank of the HSBC, or in some other bank, Citibank or Standard Chartered Bank. So your bank is different and your customer bank is different. So in this way, what will happen? It will take some time. Why it is taking some time? Because the one reason is that you have deposited the money today, and it will go to the bank, and bank will send it for the clearance purposes. It may take 1 or 2 days, because any reason is there. The banks are different, there may be the system error, or there may be a possibility of there is a public holidays there, or there is a sometime the online system is not working. So that's why the delay is there. Okay, now your account balance will be showing more balance, your cash book is showing more balance in the bank account, but bank has not yet received that money. Okay, so what may be the reason? The first reason is what that may be due to any holiday delay or you have deposited the check after working hours and it is not clear, it is not still deposit, or they may be at the bank, different bank is there. Okay, and one more reason is there is the NSF. That is very important. Sometimes customer has not available balance in their account, but they issue the check. So that is called what? That is the non-sufficient funds. Means bank balance is available, but sometimes they don't have a balance in their account and they issue the check. Who? The customer. They have not sufficient fund in their account. So what will happen when you will deposit the check? Your bank will present the check and that will be bounced. That will be dishonored. So, but you're not aware about that, or even your customer is not aware about that, because they may be thinking that that amount is already deposited, so they have received from other sources, but still they have not received. So due to the non-sufficient funds, there is a possibility, or there is a possibility, one more option is there, some issues like a mistakes in the check. The checkbook the customer has issued, there may be the number differences there. There is a possibility that the signature is not same. There is a possibility the date is not written properly. There is a possibility that the amount which is written in the words and the amounts in the other values that are different. So there are so many differences. There is some cutting on the checkbook, or in the check. So there is a possibility. So due to all that reason, bank has not yet received the money, or simply you can say bank has not yet credited the money into your bank account. So this is the first reason, that you have deposited the check into the bank, but still bank has not credited that money, bank has not transferred that money simply into your bank account. So what are the reasons? Maybe there's a holiday, maybe you have deposited that after working hours, and then it may take 1 or 2 days. There is a possibility that your bank and your customer banks are different, so there is a possibility. Then there is a non-sufficient fund possibility, means in the customer account the balance is not available, or there is a possibility some mistakes are there. For example, the date is not written properly. There is a possibility there is some cutting. There is a possibility that there is some error in the words or the amount that is written. There is a possibility that this amount is not written properly. So, or the signatures are mismatching. So, in all that reason, there is a possibility that this check will also bounce. So, bounce check is there, or the time difference is there, or there may be other banks are there, or there may be some holidays, public holidays are there. So that's why bank has not deposited that money into your bank account. So this is the first reason, the uncredited checks, why your difference is there. So you have increased your bank account, but bank has not still credited or not still cleared that amount, or still not transferred that amount in your bank account. So what has happened? So you have debited your bank account. So in the bank reconciliation, what we will do, we will just reverse it. We will reverse that one amount with the credit. So we are starting with the bank account. So what we will do, we will credit it. So this is the first thing that you have to do. So the first lesson is what, if there is any uncredited checks, the solution is what, to do the credit. So this we will discuss in detail, that how all these debit and credits will be adjusting at the end. But simple rule, if there is any uncredited checks you have found out from the bank statement, so what you will do, you will credit that. So the first lesson, the uncredited checks are credited in the bank reconciliation statement. Hi students, first we have discussed the bank reconciliation statement, that why there are the differences are there, why we need the bank reconciliation statement, and we started with the first one. The first reason of the difference is what, uncollected checks, the uncredited checks, and how to deal with it, or how to treat that one in the bank reconciliation statement. What we have to do, we have to credit that one. Okay. Now the next thing that we have is the unpresented checks. So the next thing that we will see, that why there is a difference between the bank account, the bank statement, and then the balance in the cash book. So that is the unpresented check. So what is unpresented checks? Unpresented checks are checks issued by the customers, check issued to कट करना है. So, what are the unpresented checks? Checks issued to the suppliers but not presented for collection. What is the meaning by that? Okay. Now, you have a different suppliers, supplier A, B, C, you have to make the payment to them. So what you do as a business, you are paying that money through the bank, you are issuing the checks to them. Now, you have issued the check to the supplier. It doesn't mean that they will immediately go to the bank and they will deposit the money in their bank account. It may take some time. Why? The delays are there. Why the delays are there? As we have already discussed some of the reasons here in the uncredited checks, that you have issued the check in the evening and they have received that one on the next day. Okay, or there is a possibility the time difference is there. Okay, there is a possibility that you have issued the check to them and they have not deposited yet into the bank account. Their accountant was not there or their messenger was not there. They are unable to deposit the check into the bank account. Or there is a possibility that your bank and your supplier bank is different, so it may be taking some difference. or there is a possibility of the public holiday that you have check issued just one day before the public holiday, and now there are 2-3 holidays are there, so it is not yet deposited into the bank by the supplier. Or there is again a possibility, as we have already discussed, that there may be some error or some mistake. What may be the error or the mistake? For example, signatures are not matching, the date has some issue, there is some cutting on the check, there is a possibility that the amount is not matching with the words. So there are so many reasons are there. So those are the same reasons for the uncollected checks and for the unpresented checks. So what are the reasons? It may be the time difference, or simply a delay. Okay, it may be a holiday, public holiday is there. There may be a difference in some error or mistake on the check. Okay, there may be a difference. For example, like a non-sufficient funds possibility is there, that sometimes you're unaware that how much balance is there in your bank account and you issue the check. So due to the non-sufficient fund, you may have a overdraft facility, but sometimes even it is already used, that facility limit is already used. So in that case, non-sufficient possibility is there. So there are so many other reasons that there, or they may be they have not deposited because you have issued that check at the evening. So all these are the reasons, almost same reasons for the uncollected check. So when you issue the check to the supplier, what is the entry normally? The supplier account is debited and bank account is credited. Means you are reducing your bank account immediately, but it may take 1 day, 2 day, 3 day. The different banks are there, so there is a difference. Banks are there, the time difference, the delay is there, some holidays are there, some mistakes are there, non-sufficient funds are there. So you have immediately credited, means you are thinking as a business that this amount is simply immediately transferred from your account, but still it is not transferred. Okay, it is not, because it is not presented, it is not deposited into the bank, so it means it is still not debited from your account. So it means if it is not presented, it means it is not transferred from your bank account. So that's why the difference is there. So what is the solution here? How to treat it in the bank reconciliation statement? Because it is credited, so what we have to do, we have to make the reverse entry. What we will do in the reverse entry, simply what we have to do, if it is credited here, so in the bank reconciliation statement we will do it as a debit. So uncollected checks are credited, unpresented checks are debited. So we will treat it as a debit. So in the next thing we will discuss that when we are preparing the bank reconciliation statement, how we are treating it, what does this debit means, what the credit means, and how we will treat it, either it will be plus or minus depending on the balance or debit or the credit. But here the second reason we have discussed is the unpresented check, where we have to treat it in the bank reconciliation statement always as a debit. So the plus minus we will discuss later on. Okay. Now the third reason that we have is the direct deposit by customer. Direct deposit by the customer means what? That sometime you have so many customers, they are not in the same city as a business. You may have a business in the different cities, or even possibility of the different countries. So, and you have given the option to the bank, or you have given the option to the customer also, that they can deposit directly the amount into your bank account. So what will happen? You will not receive any intimation, for example, from the bank. So in that case, the customer has deposited the money into your bank account, but still you have not received any information that which customer has deposited, how much amount they have deposited. You have not still received any information. So this information from where you will get? When the bank will inform you through the bank statement or through the intimation by the SMS or any other means, or when you will look for the bank statement, or when you will get the bank statement, or when bank issues bank statement to you. So in all that cases, the customer has deposited the money into your bank account, but you have not still received any intimation. So the customer has directly deposited the money in the bank account, but you are unaware about that. So you have no intimation about the amount and also about the customer, that which customer has received issued the money, which customer has deposited the money into your bank account. So in that case, what will happen? You are not sure about that. How you will get the information? When you will get the bank statement, you will match it. You will see that in our cash book there is no entry, because you're not intimated, you're not informed about that. So but the bank has recorded that one, but they have recorded because they have received the money. So if you have received the money, so what you will do, you will simply do that, you will again debit that one. Why you have to debit? Because this money is transferred into your bank account, so it should be debited. It is just like an asset that you have received, your receivables are decreasing. So what is the entry normally when you are receiving that? So the bank account will be debit and the account receivable, the customer will be credit. That will be debit and the customer will be credit. So now that debit is there, so the amount has been deposited into your bank account, but still you have no information. The bank has not intimated you. When you will get the information? When you will check the bank statement, or when the bank will send you the message for that, but still you have not received any message, you have not checked any statement. So that's why there's a difference. So bank is receiving the money, so obviously the bank balance will be more, but you have no information, so your bank balance as per the cash book will be less. So it is recorded in the bank statement, but it is not yet recorded by you because it is not informed to you, or you have not checked that one. So what is the solution? How to treat it in the bank reconciliation statement? That it will be debited, because you have to debit the bank account when you are receiving the money, so it will be simply debit. So this is the third reason, that sometimes the customer directly deposit the money into your bank account without intimating you, without informing you, and you will get this information when you will check the bank statement, or there's a possibility sometime bank is sending you the SMS or any other information, but still if you have not received that information, it means there will be the difference. The bank balance as per the bank statement will be more, but the bank balance as per your cash book will be less. So how to deal with it? You have to also increase the balance. Now the next reason that we have is what is the direct payment by bank. Sometimes the standing orders. What is meaning by the standing order, or what is meaning by the direct payment by the bank? For example, you have a regular payments. Let's say that the business has to pay the rent, and that rent every month they have to pay. And you have given the order to the bank that, for example, on the 5th of every month or 10th of every month, that amount should be transferred from your account to the landlord account. Okay, or there's a possibility that you are paying the insurance on the monthly basis or the yearly basis, and then you have given the order to the bank that whenever the bill is there, or the electricity bill is there, or insurance bill is there, or any other bill is there, so that bill the bank will pay for you. So if the bank is paying that amount for you, means the bank is doing what? The bank is working as in your agent. So if the bank is paying that amount because of your orders, so bank will transfer that amount from your account. So this is the direct payment by the bank. So what may be the payment? So it may be the rent, which are the regular payments. Okay, it may be insurance, it may be any utility bills, or any other. So which are the regular payments, and you have given the authority to the bank, or the order to the bank, that whenever it is due, the rent is due, or the insurance is due, or utility bills are due, so the bank will deposit that amount in their specific account. So it means bank is paying on your behalf. But what is the issue here? The issue is you will get the information about this payment when you will check the bank statement. When you will receive the bank statement, you will check it. So this is not there. In the bank statement it is there, but in your record it is not written. Why it is not written? Because you have given the information to the bank. You are not maybe clear about the amount, because sometimes the rate of the insurance are increasing, sometimes the rent is increased, you're not sure the amount of the utility bill every month. So bank is paying on your behalf, but you have not still received any information about the exact amount. Obviously you know that these amounts are paid by the bank on your behalf, but you're not sure about the amount. So how you will know, how you will be sure about that? When you will get the bank statement. So in that case, whenever the utility bills are paid, it means they are decreasing your bank account. If they are decreasing your bank account, it means, for example, if it is a utility expense or the rent expense, so the rent expense is debit and your bank account is credit. So it is reducing your bank account because it is a payment. On your behalf, the bank is making the payment. When you will know, when you will get the information, when you will get the bank statement, or when you will get the SMS, or when you will inquire from the bank that from this account for this month how much money has been paid for the rent, so you will get that information. But before that, obviously it is not possible you will get the information. Now what is happening? Your bank statement is showing less balance, but it is not yet recorded in your cash book. So it means this entry has not been recorded. So that's why what is happening to the bank account, you are crediting your bank account. So the same treatment will be there. What we have to do, we have to credit that one, we have to treat that one in the bank reconciliation statement as a credit. Means bank is reducing the money from your account, but you have not reduced yet. So what you have to do, obviously you have to also reduce the money from your bank account, so it will be credit. So this is the fourth reason that how we are treating in the bank reconciliation statement. So the first one was what? Uncollected checks. Then we have unpresented checks, direct deposit by the customer, direct payment by the bank. So these are treated as a debit, or it may be treated as a credit in the bank reconciliation statement. So these are the reasons that how we are getting the information from the bank, or when there is a difference in the bank statement and the cash book bank balance, so how to treat that one. The next reason that we have for the bank reconciliation statement, or the difference in the cash book and the bank statement, so that is basically bank charges. Now what is meaning by the bank charges? Bank charges is simply that there are so many reasons bank is charging you as a customer. If you are depositing the money into the bank account, obviously bank is charging for some of the services to the business. For example, it may be the ATM charges, it may be the checkbook charges, okay. It may be for other, for example, you may be taking a loan from the bank, so it may be like an overdraft is there, so the interest expense is there, or any other taxes are there, so like a withholding tax are there. So if the bank is charging some amount, like the business is issuing the checkbook, so it is not free. So the checkbook, the bank will charge for something. So every year the bank will charge for the ATM. Every year they will charge for some of the interest expense if you have an overdraft facility. Sometimes there's some taxes the business has to pay and the bank is paying on your behalf, like a withholding tax or other taxes are there. So in that case, if there's any bank charges, now the bank is deducting that charges, the bank is debiting that amount from your account, means the bank is reducing that amount. They're not for sending you the letter. After that they will deduct, whenever there's a due date, so simply what they will do, they will deduct the amount from your bank account immediately. But you will get informed about that when you will get the bank statement. So you will get the information when you will get the bank statement. So all these are what? These are the expenses. So this expense will be debit and your bank account will be credit. Means your bank account has been reduced, but still you are not intimated about that. You have not information about that how much the money has been deducted from your bank account for the charges or for the interest or for any other reason. Now, in that case, your bank account is showing less balance as per the bank statement. So the bank statement, they have written that one, they have deducted that money. So the balance will be less. But you're not recording that thing into your cash book. Why you have not recorded? Because you're not informed. When you will get the information, when you will get the bank statement, so you will record it. It means you're reducing the money from your bank account, but still this recording has not been done. So what we have to do, obviously, we have to record that one. So the bank charges will be recorded in the bank reconciliation. How they will treat it in the bank reconciliation? As a credit. So you have to reduce that money from your bank account. So this is the next thing, that there are some reasons are there. Reasons of the difference, like a bank has deducted some ATM charges or the checkbook charges or overdraft facilities there, and they have deducted your expense, or some other taxes they have deducted but not yet informed you. You will get the information when you will get the bank statement. So it will be credited like an interest, okay, or it may be any dividend. For example, you have some fixed account, you have some saving account into the bank, or the fixed deposit account is there. So the money is available in the bank and it has been fixed for some time, or you are investing it into the saving account, and when after 6 months, after 1 year, bank will calculate their profit, they will give you some of the amount as a share, as a profit share to you also, to the business account also. So that maybe you are receiving the interest income. Interest income, why? Because you have a saving account, you are maintaining a saving account in the bank, and the bank is giving some of the profit to you also. It may be a fixed one, or it may be depending on the profit of the bank. So if there's any bank income, so what is happening? So the bank account will be debit, means your bank account is increasing, and what is the credit? The interest income or any other income, the dividend income or any other income is there from the investment. So the bank account will be debit, means bank is directly increasing your account without intimating you, without informing you. The bank has increased the money into your account. So your account as per the cash book is showing less balance, but the bank balance as per the bank statement will be more, because they have directly transferred that money as an interest income in your account, but still not informed you. When you will get the information? When you will get the bank statement, or when you will get any SMS or any other information, or when you will check the statement or information from the bank. So then you will get to know about that information, that there is some money that is credited in your account, or some money that has been deposited in your account without intimating you. So your bank account is debited. Why debited? Because they have credited some of the income, like interest income or any other income, into your bank account. So it is not informed to you. So what is the solution? When they are increasing the money, obviously they are increasing your bank account, but this transaction you have not yet done. So what we have to do, obviously we have to do that transaction. That bank income will be debited in the bank reconciliation statement. So here, if you remember, in the bank charges, because they are reducing your bank account, so you are crediting. And here in the bank income, it is simply a reverse thing, because they are increasing the money into your account, into the business account, so that's why you are debiting. So it is simply that if there is any income, if there is any credit in your bank account, so you have to increase it, and if there is any debit, if there is any charges, you have to credit it. So it is simply the reverse transactions are there. So how we are treating that one? So the expense will be credited, and if there is any income, that will be debited in the bank reconciliation statement. Because if there is any income, your bank statement will be showing more balance, and your cash book bank balance will be showing less amount. So that's why, to reconcile it, what we have to do, we have to also increase, because bank has increased but you have not yet increased, so you have also to increase. Okay, the last reason that we have for the difference is that why the cash book balance and the bank statement balance is different is due to the error. Now, the error by the accountant or by the account holder, or it may be by the staff in the bank. So errors have a different things. Obviously, we have to treat it accordingly. Either it has been debited more or it is credited more. So it may be by the account holder. Means there may be error in the cash book, or it may be error by the bank, means in the bank statement. So the errors, there are obviously different possibilities are there. So it may be debited more, it may be credited more, it may be done by the account holder. So the accountant, the business accountant is maintaining any error, so they are recording any error, or they are simply omitting that one, or there is a possibility that the bank staff is doing any error, so they are recording something by mistake, or they are omitting something. So that will be either a debit or it will be a credit, depending on the situation. We just discussed some of the basic things. For example, if there is a account holder error is there, so what we have to do, if they have recorded more money into the bank account, what we have to do, we have to reduce it, means we have to credit it. And there is a possibility that instead of, for example, 500, they have written 1000. So what we have to do, we have to reduce it. Or there is a possibility that instead of 1000 as a deposit, they have written only 100. So it means we have to increase it. So that debit or credit depend on the error, the nature of the error. In the same way, if there is any error by the bank staff, so they may have increased the money or they may have decreased the money erroneously. So in that case, what we have to do, either we have to increase or decrease, again like a debit or credit. So it will be depending on the nature of the error. So if the error is on the debit side, so what we have to do, we have to do the credit. Or if the error is on the credit side, so what we have to do, we have to do on the debit side, means the reverse transaction will be done. Or simply we have to make the other entry for the correction purpose. If there is any error in the cash book, it need also the correction. So it should be corrected, but the bank statement error you cannot correct. You can also only write it into the bank reconciliation statement just to confirm that if there is any difference. So if the bank staff is making any type of error, you cannot correct it into the cash book. You will write it where? In the bank reconciliation statement. But if there is any error in the cash book, obviously you have to write it in the bank reconciliation statement, either a debit or credit, and also it needs the correction because it is the accounting staff of the business error or their mistake, so it should be corrected. But the bank staff error, you cannot correct it. You can simply inform them, they will make the adjusting entry, they will make the correcting entry, but until that time you have to prepare your bank reconciliation statement. And if you are preparing bank reconciliation statement, you have to simply write is a debit or credit to make both transactions same. So the debit balance or credit balance is there in the bank statement, or there is a possibility that you are starting with the cash book balance, debit or credit balance. So in that case, we have to reconcile, we have to reach either from the cash book balance to the bank statement balance, or we have to start from the bank statement to the cash book. So first we have discussed all these reasons, all these you can say the differences, why the differences are there. So in the next one, what we will do, we will calculate some of the bank reconciliations, we will prepare some of the bank reconciliation statements, and we will see that how these debit and credits will be deducted, and then how these are recorded in the bank reconciliation statement. I hope you have understood the concept. Obviously, we will prepare the calculation in the next lectures. We will do some of the examples, we will do some of the calculations with the practical like a plus minus, then hopefully you will understand it better. Thank you very much.